Hey traders, today we're looking into a trading strategy that only uses one tool and some bullish or bearish patterns. The tool we are going to use is the Fibonacci Retracement Tool, which I guess most of you will know it, and we will use the Golden Zone method for it. So what you want to do with is adding a Fibonacci retracement, which is right there. And you're looking for the lowest point of a current uptrend. So right here you have 2 times the bottom, and after that you see that the price rises until a new high after that one. So right here is where the new uptrend started, and we set our highest point on the current high. We keep it dragging. After this you're looking for that the price is going back into the golden zone where, well, there should be a lot of support. It's not always the case, but we're just looking for a confirmation that the price goes there and you get a bullish candle or a bullish pattern. So something bullish that you can see right away is that the price wanted to go down pretty deeply. It looked for support right there. It tried to go back immediately and you get sort of a hammer. It's not really a pure hammer, but you can see some bullishness in it. Then it goes higher, it goes lower, back to the support level, and you get a big engulfing candle. And that's what we want to see. So this is a bullish momentum, and after that you can get a nice long position. So what you want to do is, let me remove that. You take a long position on the close of the candle, right there, so on the start of the next candle. You set your stop loss just underneath the recent low, or you can be careful and you set it just underneath the golden zone. You can do a risk to reward of 1 to 1.5, or you can do a trailing stop loss, or whatever you want to do. For this example, we're going to do 1 to 1.5. So that should be right there. And there we would get out and we have a nice profit. The amazing thing about this strategy is that you actually only use the Fibonacci retracement tool and a few bullish or bearish momentums. And what's also awesome about this is right now I'm using it on a 1 hourly time frame, but you can do it on a 5-minute, 50-minute daily. It doesn't matter. Of course, the higher the time frame you are, the more it works, but that's almost always with scalping. So it's easier on higher time frames, but it's actually pretty good on lower time frames. So here we have another example. We take the Fibonacci retracement tool, put it to the highest point, so the price should be like there. And when the price is going back into the golden zone right here, then we're looking for a bullish momentum once again. What do we get here? We have a sort of a bearish market going down, going down, going down, and then you get 3 white soldiers pattern, 3 bullish candles. That's the point where we get in. After the third one, we set the stop loss. You can do it under the last swing or under the golden. We do it under the golden to be safe, to 1 to 1.5. There we had a nice profit once again. It's just as simple as this. You just have to look for the bullish confirmation. If you do not have a bullish confirmation, do not go in. That's where you lose. So just learn the basic bullish or bearish patterns and yeah, just test it out for yourself. Don't put all your money in it. Always backtest for yourself. See if you can see these patterns, if it works out for you. That's very important. So yeah, I hope you learned something today, and I'll see you back into the next video. Bye.